Welcome back to the deep dive. Today we're looking at, well, a real high-stakes gamble. You've got this U.S. luxury EV startup Lucid Group trying to muscle its way into Europe.
Right, going up against the established giants, the old automotive empires.
Exactly. We're talking Lucid, ticker LCID. And the big question really is this. Can their European push, led by the new Gravity SUV, can it actually shift things for them? Can it change their standing in this very crowded and frankly cooling premium EV market?
That's the mission, yeah. We've dug into a whole stack of sources, Lucid's own sales figures, some pretty stark financial warnings, but also really detailed data on Europe's EV charging network, how it's growing, and crucially, how consumers actually behave when charging.
And the backdrop is tough.
Oh, definitely.
Well,
Lucid's trying to gain ground when Europe's overall EV sales actually dropped 3% last year, 2024, largely because Germany pulled its subsidies, which surprised quite a few people. So we need to connect Lucid's tech, their strategy, with what's really happening over there.
okay, let's start with the hook then. The numbers. Lucid delivered, what was it, 10,241 vehicles in 2024.
That's right.
Which is a huge 71% jump year over year. They actually beat their own production target of 9,000. Now, on the surface, that's 71%. That sounds pretty strong, doesn't it? Like they're getting things done operationally.
It signals strength, yes, but you got to see it within their specific niche.
Yeah.
I mean, we need some context here. The Air is a luxury sedan, right? Selling just over 10,000 globally. It sounds, well, kind of small fry.
Okay.
But, and this is the key part, if you compare it to its main competitor, the figures actually aren't too bad. They kind of show resilience in a tough spot.
All right, so give us that comparison. Who are we talking about?
We're looking squarely at the Porsche Taycan. Porsche delivered about 19,000 Taycans worldwide in 2024.
19,000.
Now, what's really critical for you, the listener, to grasp is that this number was way down, like significantly down from the 41,000 they sold in 2023.
Wow, that's a huge drop for Porsche.
It is. The whole luxury EV sedan market segment is frankly shrinking. It's struggling with demand globally. So in that light, Lucid's 10,241 deliveries, plus that strong growth percentage in a market that's basically collapsing, it suggests they're actually holding their ground pretty well against established players who are really feeling the squeeze.
So, okay, a successful niche operation holding its own against a giant like Porsche in a tough segment. But if we kind of pull back the lens, look at the finances, that 71% growth number starts to look a bit less shiny, doesn't it?
Uh-huh.
The stock, LCID, has lost something like 90% over the last 3 years, trading near its low, around $2.29.
Yeah, and what's really fascinating, or maybe worrying, depending on your perspective, is this huge split. You got the company's long-term potential, the tech, versus the immediate short-term financial risk.
Which is?
The biggest risk isn't really the car itself or the tech. It's the constant, relentless need for massive amounts of cash, external funding.
Ah, the cash burn.
Yeah, exactly. That creates this ongoing risk of dilution for anyone holding the public stock. But
Yeah.
there's a but. The company is almost, you could say, effectively private. It's heavily backed by the Saudi Public Investment Fund, the PIF.
Right. The PIF, they act as the ultimate backstop, don't they?
Precisely. They're in it for the long haul, committed for decades, seemingly. So the whole survival plan really hinges on Lucid achieving genuine self-sustaining business, looking out towards 2030, all propped up by this deep-pocketed state investor.
Okay, so that long-term view, that PIF backing, brings us straight to the European strategy, the new Gravity SUV, which they showed off in Munich. And that's clearly the big play for hitting that 2030 viability target.
Absolutely.
They're not just launching another car, they're deploying a whole new platform, higher volume potential into a market that's actually quite hungry for high-end electric SUVs, right?
Yes, and this launch has, well, two really important strategic legs to stand on. First, you've got the tech itself. The core is its 926-volt charging system. That's pretty advanced. Plus their driver assistance stuff. They call it Dream Drive 2.
Okay, tech's one pillar. What's the second?
The second pillar, and honestly, this might be even more critical for their immediate financial health, is that big Uber partnership
Yeah.
worth $300 million.
Right. Remind us about that deal.
It's a major agreement. They're supplying 20,000 Gravity SUVs to Uber for a future robotaxi program.
20,000 units. That's significant volume.
It's huge. It immediately gives them a massive, predictable, non-retail revenue stream, guarantees volume, provides that crucial external validation, helps stabilize their need for cash, basically.
Okay, so they have the super deal, they have the tech. But back to that brand issue we touched on. The Gravity starts at what, $94,000 plus. Does that price point immediately put them out of the running in Europe, given people might not know the brand? Or is the tech genuinely good enough to justify fighting BMW's iX or the Tesla Model X Plaid?
Well, it definitely throws them right into the thick of the premium EV fight. I mean, the iX, the Model X Plaid, they start in similar ballpark price-wise.
Right.
But Lucid's positioning the Gravity based on, superior specs, claiming better range, standout performance, a unique luxury feel that some drivers really notice. The problem is that superior offering runs smack into a European market that's really hitting the brakes on EV excitement at the moment.
Yeah, we mentioned that 3% sales drop in 2024, the Germany effect. That makes for a pretty chilly reception for a newcomer already battling money issues.
It does. But here's the twist. This is where Lucid's specific tech choices, that 926-volt system, might actually be perfectly timed for what's happening with Europe's infrastructure.
Ah, okay. Explain that.
So despite the sales wobble, the charging capacity across the continent shot up massively, 49% increase in 2024 alone. Incredible growth. Even more important, though, are new rules, the AFIR regulations that stands for Alternative Fuels Infrastructure Regulation. These rules are fundamentally changing how fast you'll be able to charge on major European highways.
Okay, so what specifically do these AFIR rules demand?
They mandate that charging hubs along the main 10NT road network, that's Europe's big transport network, have to offer seriously high power. We're talking a minimum of 400 kilowatts per charging pool by the end of 2025.
400 kilowatts. That's fast.
And it ramps up to 600 kilowatts by 2027. This huge regulatory push for mandatory ultra-fast charging plays directly into Lucid's hands. Their 926-volt system can actually use those higher speeds much more effectively than most cars built on older 400-volt or even many 800-volt platforms.
Okay, that makes sense. So if Lucid wants the easiest entry point, where is the infrastructure most ready for them? Where's the highest concentration of this fast charging?
Well, looking at the data, you can see the leaders pretty clearly. Norway is kind of the poster child right now. It has the highest average charging speed, 68.1 kilowatts,
Okay.
and the biggest share of ultra-fast chargers already installed.
Norway, okay. Makes sense.
And then Germany, despite its recent sales dip, actually has the largest total charging capacity overall, 7 gigawatts. So these northern and central European markets, think Norway, Germany, maybe Switzerland, places with already above average charging speeds, they look like the prime targets for the Gravity launch.
So the infrastructure is aligning with the tech. That's a plus. But the big question is still, does the premium European buyer care more about that charging speed, or about the price of the charge, or just the badge on the car? What did the customer surveys show?
Yeah, the surveys on motivation are really revealing. Generally, people are happy with their EVs. 44% mention lower running costs, 38% really enjoy the performance.
Okay, standard EV benefits.
Right. But when it comes to public charging, convenience and speed are definitely top priorities. However, and this is a big however, 56% of the people surveyed said they'd choose which fast charging station to use based primarily on the price per kilowatt hour.
56%. Wow, that's
Yeah.
a huge number focusing on price, even among people buying potentially a $94,000 SUV.
It is staggering. Price sensitivity is definitely a major factor, even at the premium end. So how does Lucid's tech advantage play against that clear focus on cost?
Yeah, how?
This is where their efficiency becomes really key. If the Gravity is genuinely more efficient, better battery tech, better powertrain, means it uses fewer kilowatt hours to go the same distance, then even an expensive fast charge becomes, well, slightly less painful.
Ah, I see. Because you're buying fewer of those expensive units of energy.
Exactly. If a full charge costs, say, a hefty €50 in Norway or 45 in Slovenia, Lucid's efficiency means you get more miles for your money compared to a less efficient competitor using the same charger. It makes the high per kilowatt price more palatable.
That's a critical economic argument for them to make.
It is. But they still have to fight against, habit, customer inertia. The survey data also shows strong brand loyalty just for charging networks. 58% of drivers prefer specific providers. Over a third will actually drive further just to use their preferred network.
Creatures of habit.
And that loyalty definitely extends to the car brands themselves. Which brings us right back to Lucid's biggest immediate hurdle: their competitive position, or lack thereof, in terms of brand awareness.
Right, the mindshare issue. It really seems like their weakest link isn't the car, it's the name on the badge.
It's a massive perception gap. That anecdote from one source, about people asking if the car was Chinese or maybe a Lexus.
Yeah.
That says it all, doesn't it?
Yeah, it really does.
When you're pricing your car to compete directly with Porsche, Mercedes, BMW brands that have literally built up a century's worth of, let's call it, emotional prestige,
Mm-hmm.
you somehow have to create that same feeling fast. Lucid is asking for top dollar without much of that built-in brand status.
And while brand image is kind of a soft factor, they also face some very real, very hard structural challenges just trying to ramp up production for the Gravity, right?
Oh, absolutely. The obstacles are huge. You hear analysts say, now they just need to scale. Like it's
Just
easy.
peasy. Yeah, right.
Exactly. But scaling means burning through enormous amounts of cash, way more than they have readily available. And crucially, the Gravity is launching into a totally different economic climate compared to when Tesla, for example, was scaling up.
How so?
Tesla had the wind at its back financially in the 2010s. Money was cheap, interest rates were low. Lucid, they're facing high interest rates, way more competition now. It's just a tougher world to launch a hugely expensive new vehicle program into.
Okay, so tough scaling, brand challenges. But playing devil's advocate, on the brand awareness front, there are maybe some positive signs coming out of the U.S., specifically California.
That's true. California is still seen globally as a major trendsetter, especially for luxury goods and tech.
Mm-hmm.
And the fact that some sources mention seeing more Lucids on the road there, maybe a couple a day, and suggest that some affluent buyers might be starting to shift away from the early pioneers like Tesla.
Well, that hints at a slow, maybe, but definite buildup of prestige.
A sort of cultural validation. Yeah, if that trend, that preference shift, catches on and spreads globally, it could eventually help Lucid build that crucial brand standing they desperately need in Europe, too.
Mm-hmm.
It's a long game, though.
So let's try and wrap this up. Putting it all together, what does it mean for Lucid's chances? Can they actually shift their competitive position in Europe with this Gravity push?
Okay, look, the strategy itself, focusing on the Gravity SUV for Europe,
Yeah.
it's technologically smart, very smart. That 926-volt system is genuinely a great fit for where European charging infrastructure is heading, thanks to those AFIR rules. That's a real advantage.
And the Uber deal helps?
Hugely. The Uber deal provides that essential volume, that revenue stream, that external validation. It could really help steady the ship financially while they try to build a retail brand.
But there's always a but.
There's always a but. Execution is absolutely everything here. And Europe is just. It's a really tough market right now. You've got that lingering price sensitivity we talked about, even at the high end. And you have incredibly deep-rooted loyalty to the established German luxury brands, Mercedes, BMW, Porsche.
Yeah.
That's hard to break.
And the financial risk doesn't just disappear.
Not at all. The structural financial risk, the cash burn, it's still immense, regardless of how good the tech is. They absolutely have to survive the next few years of really intense spending to even have a chance of capitalizing on this strategic tech advantage.
So it really feels like Lucid's entire European gamble boils down to one big bet, doesn't it? They're betting that the EU's own push for faster charging will force premium buyers to value raw kilowatts and efficiency more than they value a century of Mercedes or Porsche history.
That's the core tension right there.
Is that luxury EV buyer ultimately swayed more by cutting-edge charging specs or by that classic established prestige? Technology versus tradition. That's the fight you'll be watching play out on Europe's roads.